I don't think we can have a recession anymore. Bitcoin has been the most phenomenal answer. I mean, I've been talking about this for a very long time now, 10 years, and it's been the best single way of not only avoiding the worst elements of the disruption and the debasement, but also creating wealth.
Inflation is stealthily tightening its grip on our wallets, and it's more than just a fleeting concern. It's a creeping predator stalking our financial future. As central banks unleash torrents of liquidity into the economy, fiat currencies are losing their value, like ice melting in the scorching sun. While this isn't the dramatic, system-wide collapse some expect during recessions, it's a gradual process that chips away at wealth over time. In the face of this creeping threat, Bitcoin emerges as a promising hedge against inflation's challenges. In fact, as Raoul points out in his interview with Jordi Visser, Bitcoin has proven itself to be a strong store of value during periods of economic uncertainty. Pal emphasizes that Bitcoin offers an appealing alternative for those worried about the diminishing value of cash and traditional assets due to inflation. Unlike past economic crises, today's inflation lacks the obvious signs of a full-blown recession. Yet for millions, the financial strain is real and significant. With over a decade of performance to back it, Bitcoin has consistently outpaced many traditional assets, giving investors a tool to not only preserve but also grow their wealth amidst rising inflation. For further insights into Raoul Pal's conversation with Jordi Visser, be sure to watch these clips from the interview. Please like this video, subscribe to the channel, and turn on post notifications for more content. Enjoy the video!
The other reason I think that we can't is going back to your point about what the credit cycle is. Normally, it's the collateral has fallen in value, and therefore there's a calling of the collateral for the debt. Now, if you debase currency, you optically don't let the collateral go down. And so therefore, you can't have the mass deleveraging. And this drives people bananas because they want their crisis, they want the comeuppance. I'm like, you're getting it by a debasement of 8% a year via global liquidity. And so that's like a put option on the system because it stops the system imploding. So it's it's a trade-off. Yeah, and I've talked about the same thing. If debasement is one of the things, and then as you say, there's a rolling recession around various businesses or total disruption going on, then you're going to need an anchor in the storm. You need something, and Bitcoin has been the most phenomenal answer. I mean, I've been talking about this for a very long time now, 10 years, and it's been the best single way of not only avoiding the worst elements of the disruption and the debasement, but also creating wealth. Yeah, I think we do differ on that. I still think headline inflation comes well below 2%, and core inflation comes down as well because of the lagging effect of the rents. And as soon as you start lower mortgage costs, it actually bizarrely lowers inflation for a while. In 2016-17 crypto cycle, we didn't get a liquidity boost from the US. They were trying to hike rates and they stopped because the Chinese said, whoa, stop, right? Remember, oil price was collapsing. Everyone was like, no, stop this. You're destroying everybody. Yep. So the US just stepped aside, didn't really add liquidity. And the Chinese did this again and added as much liquidity as possible. And the Europeans and the UK after the Brexit flooded liquidity. So you don't actually need the US because, as you rightly point out, Chinese liquidity is a big deal. So the question about that I want to ask is the property sector. Okay, so let's assume the Japanese will allow Eurodollars to get into the Chinese market. Let's assume there is some reparation. It doesn't yet feel big enough for the property market. I get your point of the real estate market, but the property market is like, it's a dead weight. Do you think there's more to come? Is this the Draghi moment or not?
Raoul Pal elaborates on the current phase of the business cycle, emphasizing the familiar opportunity for certain markets to rebound and perform well. He notes that as the economy begins to recover, the US dollar typically weakens, creating ideal conditions for small-cap stocks, commodities, and emerging markets. These sectors often experience significant drops during downturns as investors seek safer assets. In the same interview, however, Jordi Visser highlighted Bitcoin's rising appeal, pointing out that more millionaires are being created in crypto than in traditional markets. Visser emphasized Bitcoin's resilience, reaching new highs even in a bear market, and stressed its importance for populations in countries like Argentina and Brazil, where trust in banks is low. He also noted recent developments such as the introduction of Bitcoin ETFs and the growing prominence of stablecoins, indicating a broader acceptance of digital currencies. Let's watch more clips from the interview for further insights into the Jordi Visser discussion.
You've laid this out so many times for so many years about why Bitcoin is so attractive. You were there way before me. The more time I spent on it, the more I just realized that the anger I was listening to and all the problems of the bottom 70% live paycheck to paycheck. There's more millionaires created inside Bitcoin every year than there is in the stock market, yet the stock market goes up a lot. Like,
really, is that the case?
Yeah, I mean, millionaires are being created in Bitcoin at an insane fast pace. And again, you and I have talked about how many owners there are in terms of wallets and how they kept growing. I'm actually astonished at how many macro people still either don't own it or say they've missed it. When I just sit there and I'm like, do you realize that we had a complete bear market, like a dot-com bubble that unwound in the crypto market, and Bitcoin made it to all-time highs while that other stuff is still sitting at zero, most of it. Bitcoin's a hard story to give to Americans because there's other alternatives of what you can buy. You can go buy NVIDIA, you can go buy the Qs, you can go buy whatever you want, and that stuff's going up. In countries like Argentina and Brazil, where you can't trust the bank, you can't trust the government, you can't trust the FX, well, they don't have another option. And that's where Malay was. And Argentina's got a rich history of being a place that's loaded with commodities, loaded with sophisticated commodity traders, but just hasn't been able to get out of its way. When I moved to Brazil in 1997, from 1986 to 1994, they had 5 currencies. So they constantly had to tell a story about what was happening. Bitcoin is happening, and it is a replacement for all people below the wealthy in their FX for exactly what you said, which is the reason the Brazilians had to keep changing the currencies was because the debasement was happening with hyperinflation. This is not hyperinflation. This is a slow default on the debt that's happening through debasement. And the people that are getting the most angry are the people that aren't part of the top 1%. And what's happened this year in Bitcoin, not just Bitcoin and stable coins in particular, to get the ETF launch happen to where you had 100 and change % run up leading into the event. It still went higher in the month after, and now it's consolidated for the last 6 months.
Yeah.
That's a good sign when you have a major event like that everyone was looking for. You've had politics where they've had bipartisan issues that have made it through Congress. You have the accounting change, which comes into effect, the FASB change, which comes into effect for ownership, for people who want to have it on their balance sheet and how it gets marked to market. The stablecoin growth and the fact that Terra Luna blew up. You had all these blowups, and yet stablecoin growth, they're now the 16th largest treasury owner in the world. Digital transactions, as I mentioned, is something people should really read the McKinsey report on digital payments. Digital payments around the globe are going higher. And in other countries, it's an accelerating fact that they're using stable coins more and more and more. And stable coins will be the connection. So don't think of Bitcoin as an exchange of value, but think of stable coins, and stable coins are within the ecosystem of Bitcoin. So that absolutely is going to be there. The other part is I do believe in the deflationary side. There's no way that the blockchain isn't the most deflationary. When you get rid of the middlemen, you've been able to reduce the cost of everything. And so the easiest way for the middlemen to be reduced is obviously through smart contracts. The smart contract should be done through AI agents. So if you buy a home, theoretically, all of those phone calls you have to make to your lawyer, to the insurance person, to all of these things, they all end up being money. They all end up being time. If you buy a house and the AI agent goes and does all of those pieces, you've now taken the cost down dramatically. You've eliminated most of the middlemen. That is going to be what's next, and that just leads to more need for the blockchain.
Meanwhile, Bitcoin is currently consolidating above the critical $60,000 support level, and market analysts are watching closely for potential upward movement if it surpasses the resistance zones at $61,200 and $61,500. Following a recent decline, Bitcoin fell below the $61,200 mark and broke through significant support levels at $60,500 and $60,200, dipping to a low of $59,850. However, it has since begun to stabilize, indicating a potential recovery phase. The price recently climbed above $60,450, breaching the 50% Fibonacci retracement level from its previous downward movement. Additionally, Bitcoin has broken a key bearish trend line with resistance at $60,850 on the hourly chart for the Bitcoin USD pair. Currently, Bitcoin is trading below $61,750 and the 100-hourly simple moving average, SMA, highlighting the need for upward momentum to regain bullish sentiment. For Bitcoin to initiate a significant upward trend, it must first overcome the resistance of around $61,400. The next crucial hurdle is located at $61,750, which aligns with the 76.4% Fibonacci retracement level. If Bitcoin can clear this resistance, it may target the $62,350 level, with further gains potentially leading it to test $62,850 and possibly reach $63,200. On the flip side, if Bitcoin fails to break through the $61,750 resistance zone, it could face another downward move. Immediate support is located around $60,450, with significant support at $60,000 and $59,850. Should losses continue, the price might decline further toward the $58,800 support level, indicating a critical juncture for Bitcoin's near-term performance. Traders and investors will be watching these levels closely for any signs of momentum or reversal. As we come to a close, what are your thoughts on the discussion? Do you also agree Bitcoin is the perfect solution to the current economic inflation? Please share your thoughts in the comments below, share this video, and hit your thumbs on the like button. Thanks for watching, and don't forget to subscribe.